You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it's time for TWIFO, This Week in Futures Options. Glad it's not a video show because I'm always bopping around to that funky tune there. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you like the new time for TWIFO. It still says 1:30 p.m. on Friday. There, we'll fix that for you in the podcast there. So, yeah, 1:30 p.m. on Thursdays. Seemed like you guys like it right after the new time for Option Block, which is noon Central on Thursdays and Mondays. So things are all aflutter here on the network. Things are moving and shaking. People seem to like the new times. So that's fun. And it's kind of fun for us, too, to talk, during the day on the market as opposed to after it's closed, at least on the option block. So that's always kind of fun for us. Let us know what you think of the new times. We love to hear from you guys. And of course, you can always join us live still via the Mixler link. That hasn't changed. That's always the same, not just for this show, not just for Option Block. You get everything on that link. You get Involve Views. You get some of the fun interviews. You never know who's going to sweep through the studio this week. We had people coming in from the crypto space talking about all the world of crypto and blockchain. I'll be speaking at the Big Voice of Blockchain conference coming up here in Chicago in a week or two. So we're talking about all that kind of stuff. And more importantly, for our perspective, the world of crypto derivatives and what lies in store for that. What can we expect from that? So kind of a fun thing. That'll be hitting the network soon if you did indeed miss the live feed. So you get a lot of fun stuff if you're on our Mixler. And of course, you can always just subscribe to our network via wherever you get your favorite podcasts, and you get it all there at your leisure. The new earlier time for Option Block, by the way, means you should be getting the podcast same day, which is kind of nice. A little fun bonus for all you subscribers out there. Of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, we do like to hear from you guys. And joining me on the program today, my cohorts, my partner in crime, back, refreshed, rested from his epic vacation, Mr. Nick Howard, the founder of Bantix Technologies, creator of a little platform we like to use around here called Quick Strike. Mr. Nick, welcome back to the show, sir.
I think you're giving my time off a little too much of a billing. It's just time off just to recharge and take a little bit of a break. Been running pretty hard, so it was nice to have a few days off.
You didn't go anywhere fun and epic? I thought you went back east and had a whole palooza.
I was out east for a little bit, but not necessarily a palooza. We had a rain-a-palooza on Saturday in New York, which was the most terrifying time in the car that I've had in a long time.
Yeah, New York in the rain is always fun and pretty.
Well,
and it smells
on
nice.
FDR Drive with the flooded roads, and you're in the back seat while an Uber guy drives. It's quite frightening. But yeah, it's good to. I say it's partially good to be back. Feeling a little bit recharged. Still would rather be on vacation, but we're all good.
Wouldn't we all? So you're saying your time off was not recharging, instead was terrifying. So that's.
Well, I was recharging after the terror subsided, right? So.
You're doing vacations wrong. You're supposed to come back recharged and rested, not terrified.
Not terrorized.
And yep. Horribly scared to do. Hopefully we'll calm you down here as the show goes on. But since you've been off for a while, you missed our big kind of equities palooza last week. We had Sean and Ron from FTSE Russell on there, as well as Uncle Mike. That was a fun one. Sean, of course, traveling again this week, so we won't have him joining us here in the studio this week, but a lot of fun stuff. Mr. Nick, I'll let you spin the wheel this week. Where do you want to start on the old TWIFO program?
We just go with what we know. We'll start with our crude oil, right? We should do that like we always do. It's a good place to be.
All right, let's get crude then with crude. It's been an interesting week for crude, and all you guys like watching it out there as well. Excuse me. We saw a big drop yesterday on going into Wednesday. Again, that EIA information kind of surprising a lot of people. They said the crude inventories were up nearly 7 million barrels, 6.8 million barrels for the week ended August 10th. Remember, a bit of a lagging indicator there. All the analysts, goes to show what they know. All the analysts had forecast a decrease of 2.4 million barrels. So they're 2.5 million barrels the other way. So yeah, they don't really know what they're saying. So all of that, of course, kind of combining to drive it to pretty much the lowest level in about 10 weeks. We've seen out there in crude levels. We also saw EIA data from the American Petroleum Institute, data, I should say, from the API on Tuesday. They said the stocks had risen by about 3.7 million barrels. So was kind of a 1-2 punch on Tuesday. And Wednesday, coming into today, we're seeing crude right around the 65 level, off about 2 handles net so far on the week. By the way, you guys, as always, can play along with the home game, cmegroup.com/TWIFO, and that will get you all the reports Nick and I are looking at right now live here on the show. If you listen afterwards on the podcast, make sure you go into the expirations tab and you change it back to today, Thursday, so you can see exactly what we're talking about here. And if you do that, you'll see crude off about 2 handles net on the week. Nick, crude vol's kind of been kind of like gold vol. It's kind of like this little fleeting thing that, you hold it in your fingers and you get to kind of treat it gently because you're afraid it'll go away. And this week, we're seeing kind of crude vol up a little bit again, which I think crude vol premium buyers who've been writing to us for a while will be excited about. Whether this is really any sort of, sizable increase or if it's here to stay, if it plays out like all other vol we've seen in crude of late, it's just going to wither and die very quickly. So not much maybe to get excited about there over there on the old crude front. Of course, we have continued concerns as well come out of Turkey in that area. And as always, just pick a day. The Middle East concerns are always there. So all that kind of factoring into what's going on. It's a heady brew over there on the crude side of the fence. Let's see what was lighting it up in WTI over there at CME this week. So far, actually kind of a light week. OI only up about 2.7%. Go figure. It's kind of middle of August here. Not really prime time for a lot of size institutions to be slinging a lot of crude here in terms of where things were lighting it up. Number one with a bullet coming here. Let's see. We're up, first off, 42% coming in that front SEP contract, which is kind of interesting. And number one with a bullet out here. Let's see. Let's go. Although it's SEP, pretty much what you might expect given the movement we've seen of late. If you picked SEP front month at the money puts for your number one option with a bullet here in good old WTI this week, then you are correct. SEC 55 puts doing 51, almost 52,000 here on the old week. And I'm going to dig into this. I'm actually getting a little bit of a, it's not showing me the middle stuff here, Mr. Nixon. I'm going to reboot. Why don't you tell us about what you see here in terms of crude vol while I bring up my quick strike, sir?
Well, I was going to say SEP expired about 11 minutes ago, so you had your screen up for about 10 minutes.
Yeah, I had it up.
I took a screenshot.
See, you're smart. I should know to do that by now, and I always forget that.
Well, so. I need to accommodate it. I need to accommodate the expiration a little bit better in terms of being able to show it. Everything is based on if the thing's active, it shows. If it's not, it doesn't. But in any case, what we're seeing here, you're right. I have the 65 puts were the big winner in September, and as you would expect, we flirted quite a bit today with around the 65 strike. So if you look at like last night around 8 o'clock, it was like 64.5, and then in the evening it traded up to 65, and it kind of jogged around 65 quite a bit just this morning before the open, traded down to 64.75, and then we had one more little flirt with 64.80 around 11 o'clock, and then came back up around 65.5. So there was the highest open interest was around that 65 strike. You had the most activity around the 65 strike, as you would expect, as I'm sure there were people who are short that September put, defending around that put, and same thing the other way, people scalping the gamma on the other side. So as you would expect on expiration to see the big activity there. So about 25,000 in the puts and about 17,000 in the calls in the 65. So a total around 41,000 and change trading on that strike as it bounced around that price. And you look, all the weeklies and the October, they're trading a little bit below. So that was already below 65, where the September was just sort of hanging around 65. So what else we see there in the September, all week, there was quite a bit of not that much activity outside the 65 and 66 strikes. So we saw some 65.5, some 66, but no other crazy stuff. Some 64s and some 64.5s, but after that, you're not seeing a whole lot of activity. So real lot of concentration in that 64.5 to 65.5, 66 range, as people were trading, expecting. I had seen some stuff on in the chat that I'm in, how people were short some 65 puts, and they had made some money right away from last night. So people were playing around there, expecting it to maybe break 65, but not to go too far down. So that's where you see most of the trade in the options for the better part of today. But with that said, still, November or October saw about 12,000 of the 60 puts trade. Take a look and see what that looks like just from a general number standpoint. So 60, 65, 64 strike on the put side. Some upside definitely this week in the October, 70, 75, 77, 68. So that's where and even the 72. So a lot of upside in the October contract, and I'd say the upside reigned in terms of the numbers for the week in October. So short-term weakness, long-term a little bit more bullishness, at least from the first two contracts where a majority of the activity takes place. And we can go out to November and December and see we have some other stuff going on. If I take a look at these, since that had the next big number. Not a lot of action in the December contract today, but some action, quite a bit of action in there for the week. Well, yeah, so, Mark, interestingly enough, I'm a little bit, I'm going to lose. Mark, jump in if you can hear me. Can you hear me?
I can hear you. Yeah, I hear you.
Okay. I hear my headset is starting to flash red at me because I was gone for 5 days, and I think the cleaning
you didn't charge
the cleaning people must have kicked the cord out. So what I'm going to do is I'm going to keep talking till my headset dies. I'm going to get on my phone and dial in a second. But what we're seeing here this week was a real good indication of a lot of activity in that expiring contract. There was not a great deal of volume that was going on outside of there. And if you look at the numbers, you're seeing just that. You're seeing an October and September. So not much going on other than that. And I'm going to lose you in a minute, so why don't you jump off, and then as soon as I get back, you jump in. As soon as I get back on, we can talk some volatility.
No problem. We'll talk some vol once you get your situation sorted out over there. Yeah, it's interesting looking over here. We talk about the 65 strike. That's kind of where we expect a lot of people to be focusing their attention. And a little bit farther out, we always like to look a little bit farther out. You guys can do that as well on the cmegroup.com/Twifo, or head on over to bantix.com, BANTIX.com. Click on the quick strike button there. You can go see this stuff for yourself here as well. You'll see also the double puts were kind of active this month as well, or this week, I should say. The Dece 2019 55 puts, as well as the June 2019 55 puts, both doing the Dece doing about nearly 3,000, the June doing about 2,300 out there. And for those of you, if that's not bearish enough for you, and that's not far enough out for you, Dece 2020 45, looks like 50-45 foot spread going up 1,135 times on Tuesday. So a 5-handle put spread 1,100 times. Interesting choices there across the board as we're seeing all things going on here in all things fun. Let me see if I could get Mr. Nick there. Are you there, sir? Hold on one second while I get him back on. Well, let's keep doing that. I'm going to try to get Mr. Nick back on here, listeners, while we keep on. I think he's on his, I think he might be on his cell here. So let's get him up on the old cell here, listeners, and that might work a wee bit better here. As we keep on rolling, I'll keep on rolling here, listeners, with all things. Let's get into the equities a bit. Let's try him. We'll try him on the old regular thing. We'll try him on the regular. There we go. See if we get him on the old normal scenario. There you are. There he is. He's back. He's back.
I wasn't sure which way you were trying. I can get right on my phone, and it's actually probably better. But
whichever you like. Whichever you want. If you want to be on your phone, I'll dial you there. Whichever you like.
No. My phone Skype is fine as long as I got a number.
Oh, okay. Perfect.
No, I'm all good.
All right, we're good to go then. I was just going to say, let's get into it a little bit too. People are hitting us up. Maybe we'll do a little extra time on the questions this week too. People are hitting us up with all sorts of fun stuff this week. People were chiming in on the ags. We had a good conversation about the trade wars and the ags with our boy Blue Putnam over there at CME Group a few weeks ago. A lot of you guys are still intrigued by all things kind of soybeans, and the ags in general are kind of ground zero for the trade wars. If you want to see this for yourself, listeners, head on over to the quick strike page. Go to ag in the drop down there. Go on to agriculture, and then choose soybeans over there, and you could follow along with us right here as you're doing this. I like to always hit select all under the expirations, so you could see kind of the full panoply of expirations and what's going on in all of them. But that could be a lot of data for you, so it kind of comes up to the default 4 or 5 months. That's fine for most of you out there. I like to look at all of it, but then again, I'm kind of crazy that way. And if you're looking at this kind of stuff here, you're going to see also we had your buddy, I think it was your boy, Mr. Mark Brandt there, Mr. Nick, sending us in this chart on the U.S.-China soybean war battlefield. It's kind of fascinating stuff. It's got a bunch of things. We'll probably put it in the show notes so you guys could read along with it as well, showing how kind of just in general Chinese imports, how they're changing over there. Also, how much cumulative soybean imports they're pulling in over there, and how that chart has just been on the rampage for the first half of this year. One boatload greater than same period last year. First half of this year, Chinese soybean imports in the first half of this year totaled 44.9 million tons. That's one boatload greater than the same period last year. A boatload, obviously, literal in this sense. Let's see. Also, soybean exports. Also, interesting conversation. A lot of you guys are chiming in. We'll get into that a little bit later about other players getting into the beans space and what that might mean for this going forward. Right now, let's look at the net underlying. All you beans bulls. That's a fun one to say, beans bulls. Might be liking what we're seeing here this week with the soybeans getting in rally ho mode yet again, up about 30 handles net on the week, hovering right around 880 right now. Still not quite back at that par level, but threatening 900 again, so people probably excited about that, up about 4%. So far for the week. Vol also starting to creep up, at least in that narrower portion of the curve. So that's probably maybe a welcome sign for a lot of you beans options traders out there this week. Open interest up about 3.3%, decent for an otherwise quiet period here in the old markets as we're seeing things. Let's go out here and see, Mr. Nick, what was lighting it up out here. 49, almost 50% of the paper coming in this November contract. It's kind of the way the ags roll. They go on those.
That's a new contract, right? That's the new contract.
Yeah.
I'm sorry, that's the old.
That's the old one.
Old contract. One. That's the old contract, right? So,
Nova's been out there for a little bit, and it tends to light up the tape quite a bit. It's a nice respite from all the products we talk, Nick, that tend to lean front month or weeklies in the equities, to see the ags kind of play by their own rules. Half the paper going up here in that Nov contract this week, 49.2% to be precise. And if you're asking yourself, what would be the biggest trade, the number one contract lighting it up this week out here in the ground zero for the trade war, aka the soybeans market? It would be these Nov 800 puts. So slightly out of the money puts. So they were in the money not too long ago, and then at the money. Now they're out of the money puts here, doing a lot of paper this week to the tune of 6,000 on Monday, about 4,000 on Tuesday, 2,500 on Wednesday, and 4,000 and change today. Let's see in terms of, exactly. It's still old crop versus new crop fun stuff out here in the ags. Number 2, 860 puts, so more at the money, pretty much about 20 handles out of the money now, doing 11,000 and change, almost exactly tied with the 1,000 the par calls. So some optimists still lurking out there. Worth noting on the par calls, pretty much all the paper, a lot of it was on Monday. Decent active week, actually, 2,000 going up today. All that, it's kind of, the OI is kind of unch, so there's a lot of back and forth on that par strike, which isn't that surprising. That's kind of a strong sentimental technical level out there. Everyone's waiting for it to see if it can retrace back to the par level, which is where it was, or a little bit north of there when all this craziness began. Remember, Nick, not too long ago, we had the Acuna guys on the show doing a deep dive into ags, and they were talking about how we had just broken through the par strike to the downside, remember? And how it was a kind of a big deal for them psychologically. So not surprising to see that the par strike is lighting it up. 940 calls also active here. Number 4, number 5 would be the 840 puts. So all that Nov kind of all the time out here. Mr. Nick, what's catching your eye out here in the soybeans? That is, if you can avert your gaze from this very dense chart that our listeners are sending in here.
Yeah, I'll have to take a closer look at that one because I still need to sort of get my head around this whole thing. Once Blue said that the tariff war is sort of built into the market, I sort of shut out any kind of new news about it and just kind of focus back on the things we watch in general. But catching my eye. So first off, like you like to turn on everything, and I like to minimize the view. So it all depends on which product it is.
Really?
So yeah,
that's funny. I figured you'd want like all of it going.
Yeah, I think I try to. I think I shoot it on. I shoot it on at first, and then I strip it down further. I shoot everything on, and then to see what parts I can ignore. Like I always put it all on to take a look and see if the weeklies are doing anything. And once I see that that's not happening, I mean, for instance, in crude, then I'll turn those off again. But in these, and I looked. I mean, since it's old crop, it's still old crop SEP and new crop short dated SEP, October and then November. That's really where all the action is. And if you look at it, you do the math and load it up, you got 52%. 16, so that's 68 or 69 plus 1, 70. So yeah, all the activities in the first 4 contracts here. When I say first 4, I'm saying the first 4 that are expiring, not including the weeklies, because I pulled in the short dated September, which has 8 days, which is what, which also points to the November underlying futures contract. So catching my eye. I mean, obviously the big move up this week, a lot of it happened early in the week. After that, we sort of consolidated and traded around. Even with that, we have some increase in volatility, and the increases are really coming. Looks like they came in today. So if we look at we were off until today in terms of the volatility. So that's probably something that's interesting, given especially where we were from a future standpoint coming into the day. Because if we take a look at it, I mean, we chopped around a little bit. We started around, well, I guess we were up. We started around 870 and we went up to 890 and then we came up to 896. No, so I was looking at the intraday. So all the upside is coming today. So that's where all our increase in volatility is. I had just the intraday futures chart, not the week. So so that makes sense. So we had some big activity, big movement in the futures, which is going to give us a little bit of the pump in the vol. As far as what I see over here in the skew, we have the September and the short dated September. Those both have 8 days to expiration. They're on 2 different underlying contracts. So I don't really want to even bring those in when we talk about the skew, because it's sort of just not the same once you get inside of 14 days. But if we look at the October and November, we don't see much change in the November. Even though we had a big move up in the futures, we don't see much change in the skew. Puts are still a little bit soft and calls are a little bit bid. But in the October contract with 36 days to expiration, we saw the puts get offered a little bit and the calls get bid. So, again, probably as you would expect, given what kind of price movement we had today. So other than that, and again, I don't think this is, we're pretty casual in our observance of the beans, right? So, and the corn and the wheat. But I don't think these markets are for the faint of heart. I mean, the stuff is all over the place, and I would imagine you really got to be careful. If you're paying attention, it seems like there's some good futures and option scalping stuff there. But, just as the casual observer and not my head, buried in the beans or the wheat or the corn on a regular basis, it's kind of a frightening set of contracts when it comes to getting your face ripped off.
Yeah, it's been on quite the run of late. You're right. So yeah, it's one of those products where if you don't really know the planting and the harvesting, old crop, new crop, if you don't really know all the fundamentals, I mean, that applies across the board for just about any product you're going to look at. But it seems like the ags, I've said as many times on the show, ags kind of have their own unique rules of engagement that are separate from a lot of the other product complexes out there, different than the metals, different than the equities, different than crude and things. And so if you don't understand that, if you don't understand the paper flow and how these contracts are rolling, you're saying to yourself, why is the NOVA contract so bid of the others from a vol perspective? Why is the term structure so funky? If you don't get why that is, then yeah, you probably shouldn't be slinging the beans out there, especially not these days, because they are moving and they will leave you in the dust if you don't know what you're up to. But that said, I know a lot of people like to look, particularly we saw this a lot when equity vol was kind of, shall we say, complacent. People were looking farther afield for a lot of interesting stuff to trade out there, and the ags were coming up on their radar. So they certainly are moving. If you can handle what's going on out there, they are something to watch. Speaking of equity vol, let's touch on it a bit. We did a big equity palooza with the Russell folks here last week. I don't know, Nick, I know you're not a huge technical guy. I'm not a huge technical guy either. A lot of people have been hitting us up about this whole Dow in a correction level, and people are writing about it now, Market Watch and others, saying the Dow, which is an index we don't talk about a lot, quite frankly. We talk more S&P and Russell and obviously NASDAQ and others. Not a lot of Dow, just pulling up some Dow. The Dow E-mini doesn't really trade a ton over there in terms of options over there on the CME, which is kind of interesting, and maybe a conversation for another day as well. But the Dow is effectively in the longest, at least people like to pull up these shall we say, random distinctions. The Dow is the longest period in correction territory since 1961. So 131 trading sessions. They define this, of course, as if it hasn't... it has now spent the longest period. It has essentially, it has not failed to move 10% above the closing low hit earlier this year. So it has failed to do that now 131 sessions. And so if you're wondering where that level is, it's about 2586, or 86, I should say. So about roughly 300 handles north of where it is right now. So far, I'm looking here, Mr. Nick, the Dow options not exactly lighting it up here to show me either way what is going on. In terms of vol, it has been an interesting week. Out there, S&P land, we're seeing S&P vol, aka the VIX, continuing to get a little bit of a bid, up about two and a half handles from where it was this time last week, right around 13 and a quarter or so. Russell vol also up about a handle from last week. But remember, Russell vol always a little bit inflated over S&P vol anyway, so you're going to see that bid. But that spread has actually tightened quite a bit. That kind of RVX VIX spread is down to about 1.3. It gets up to about as wide as about 3 points sometimes. Again, this is talking just from the cash, but still, it's interesting, worthy of note when those things start to get tight, or when those things start to get pretty wide, you start to see some interesting vol trading opportunities between the two, or at least you would if you could sling some RVX. They're working on that, I know, over there on FTSE Russell. Instead, let's look really quickly here out in the E-mini, S&P 500. I know you guys like to sling yourselves a lot of the E-mini. Let's see what's lighting it up. We said we're kind of unched on the week here, coming up slightly right now, up about 10 handles in the E-mini. We're seeing the front month 2,800 puts, or should I, which is about, pretty much right about 50 handles out of the money, lighting it up to the tune of 42,000. Again, it's in the weeklies where all the action is in the, unlike the ags and everything else, weeklies are where the action is in the equities in terms of weeklies. 2,800s, let's see anything funky lighting it up here in the E-mini. 2,000 puts in June of 2019, lighting it up 5,500 times this week. So there are still some bears or some concerned citizens, shall we say, out there lurking. 1,300 puts also as well going up in, what are these, week threes out here in October. So go figure. Kind of pick your poison, Mr. Nick. Anything catching your eye out here? Equity vol this week. I know you're not a huge equity guy, Mr. Nick. Also, I think we didn't get a chance to get your insights into crude skew. I think you had some phone issues. So if you have anything interesting catching your eye there as well, have at it.
Well, let's go. Well, I'll go with equities and then I'll revert back to the crude, I guess. Well, I guess the first thing, and you and I have spoken a little bit about this, and then I did look at what kind of markets are being made. But the Dow of all things, the future as well as the option, it would seem like the one that people understand the most, right? Because,
you'd think it would have a lot of cachet, yeah.
Right, because people when they report it, they talk about the Dow Jones is up this much or that much, So it's really sort of interesting to look and see that it's only got 10,500 open interest. The volume numbers are anemic, so it's strange. So that to me is always sort of an anomaly of the most popular index. It's always strange. I think I got cut off. A phone call came in. The most popular index in terms of reporting in the news is the least popular in terms of the trading. And maybe there's no surprise that that's the case, right? Because people aren't going to trade the one that's most common to the people out there. So that would be my first. Well, that's a comment more than it is observation. I mean, I enjoy the equities because I like trading the individual equities and individual equity options and stuff like that. It's just that the futures is, like I say this all the time. As much as I traded the futures and I traded the options, it's still, to me, the whole margin thing still scares me. So one day I might get over my fear of margin and that kind of stuff. But it's just that it's just so many things. There's so many things to watch that sometimes I think I just kind of avoid looking at the equities and all that.
So are you talking straight 50% equity margin? That spooks you, or like the margin on the futures and the equities because they move around so much?
Yeah, just straight up. The fact that I don't understand margin that well, because when I did trade on the floor, I traded for banks and groups, and I never had to deal with the accounting part of it.
Yeah, that's a different scene entirely, yeah.
Yeah, totally. So I didn't have to worry about where my things were. We just had, at O'Connor, we had unlimited supply of dollars, and at the other place, it was being handled by the back office. In any case, catching my eye, just, again, continued tremendous open interest in the increases in the minis, as you may have mentioned. And then the skew, again, and I think maybe I don't care about that so much, is because the volatility, the action in the volatility is around the net level of the vol itself, right? It's not so much in the changing shape of the curve or anything like that. So, we see that equity vol is sort of low. It's up a little bit this week, but basically flat. So I think you got to keep your eye on the fact that we've been sort of trending. We had a bigger move today, but it's still, in the scheme of things, not really a breakout move. So vol is still sort of in a channel, and then you're not seeing much change week over week in terms of the skew. And again, it's the same thing we talk about all the time in terms of the investment skew. The calls are going to be off, the puts are going to be bid, blah, 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 all that kind of stuff. So I think we got to continue to watch just the level of the index volatility and the fact that it's not so high, and there is, that's just a sign that it could go lower, or that at some point it's going to be a good just net get in order to get in there and wait for something good to happen on the upside or something scary to happen on the downside. So that would be just general observations there. And then as far as crude, let me jump over to that real quick and see what I didn't see anything offhand that I thought was completely out of the ordinary. We didn't see much of a change in the quick skew. So calls are still a little bit cheap, not quite as cheap as they were. Puts are still expensive, not quite as expensive as they were, at least in the contracts where the majority of the action is taking place, which is the OCNOV and the DEES. So, again, we're going to channel trade here, and you mentioned at the top of the show about how the oil supply was increased, and then the analyst said it was going to go down the other way. And then I just read an article where there's all kinds of buying or consolidation in the Permian Basin because they think that Texas can become the number 3 oil producing country. I say that deliberately, in the world, So if they keep pumping it out of there and there's a big glut of supply, then you think you're going to see prices that are just going to stay depressed. They said that that's profitable at $40 a barrel. So, the big trick right there is getting all that excess oil out of there. So once they get the pipelines taken care of and they can get it out of Texas. So again, not knowing anything, but other than being a casual observer and watching what comes across the wire, we might be in these 40 to 70 range for quite some time, or 50 to 70. So I'll be like Citibank and say we're probably going to be in this 55 to 75 price range for a while.
Uh-oh, you getting Citi on me now? You getting daring
in your... my Citibank price range of the week.
You getting sponsored by Citibank? Yes. If you haven't listened to the show in a while, listeners, you know that that was a fun, shall we say, brave prediction folks at Citi made with like a 40 handle wide prediction for WTI over the course of the next 4 months. We like to mock it roundly here on the show. You mentioned upside and things happening on the upside, Mr. Nick. If you're looking for something that happened on the upside, then you were disappointed in gold this week. Gold continuing to make the gold bugs just cry into their piles of Scrooge McDuck bullion there. 1180 on going up, coming into this week, I should say, coming into the show on the gold here, off 35 handles. So the downside continues to just bleed red out here, off nearly 3% again for gold this week. All this downside, I guess, is good from a vol perspective. If you wanted a little bit of vol juice, a little bit of vol coming back up. I mean, the one thing we joke about crude vol, gold vol has just been a disaster in terms of just it just can't catch a break, can't catch a bid and sustain it. Maybe this will continue to be. The one upside of it is that it's so cheap that any move you might be able to, as Nick would say, pay the rent and scalp it a bit. And you are getting some moves in the underlying. So that might be the one lone bright spot. Either way, vol up pretty strong this week out here in crude or gold. Sure, we'll see if that is something that is sustainable. So far, for the entirety of the year, the answer to that has been no. We'll see if this week is the difference. Volume also up pretty strong. OI up about a little over 4%. So in an otherwise quiet week, gold is delivering the goods, at least from an OI perspective. Let's see where they were lighting it up out here this week, Mr. Nick. I said we're closing right around 1180 coming into the show here. We're seeing 11.5 puts out here in ACH, kind of leading the dance out here. So near out of the money puts, but not that far anymore. 11.5 sounds like it should be far out of the money, but not too far anymore, given all this continued downside. Lighting it up to the tune of today, actually the big day, 2,500 on the tape today, I guess, with the sell-off. And then the rest of the week, about 2,000 on Monday, about 1,800 on Wednesday. Kind of light on Tuesday. Net actually closing a little bit. Of course, we don't have today's numbers, so that might change that a bit. So yeah, 11.5 puts, number one with a bullet. Actually, no, you know what? I missed one. It's a little bit farther out. Let's go farther out and farther down. This is why I open up all the months, Nick, so I can see everything. We actually have a bit of a tie, actually, between the 10.5 puts in November doing about 8,000, almost 8,100, and then but taking it number one with a bullet actually is all the way out here in March of 2019. The bulls are not dead. They have not gone away. Maybe they're just taking a break. It's the 1,400 calls in March that are actually our number one, taking the top spot with just 200 extra contracts, 8,322 to be precise. 4,500 of those going up today. So again, the OI so far is kind of unched this week, 3,700 on Tuesday, but we don't know today's numbers, obviously, from an OI perspective. Looks like we got another funky vertical going up here, Mr. Nick. We got, is it the 1,400, 14.5, 6,000, and 300 of the 14 halves going up today. Also, 40 to 200 of the 1275s also going up out here in March. So today's the day for funky March upside. Maybe we got a bit of a funky vertical with some far out of the money call kickers. What do you think, Mr. Nick? Maybe because the 1275 is also doing 4,250 today. So maybe paper buying 1275s, selling 1400s. All not quite 1-to-1, doing about almost 1-to-1, about 200 odd contract difference. And then I guess maybe deciding if craziness should abound to load up on more. 6,000 of the 14 halves. Either way, the ratios don't really pan out. But it is a bit of a head scratcher. Mr. Nick, is this coming up on your blocks or is this all on the screens?
I see a trade selling the 1275, selling the 1400, and buying the 1350. So that's kind of weird. It's not even a tree. It's weird, and it's not. It's a 14 by 24 by 17. So I'm not even sure.
So it makes no sense.
That is. Well, there's a couple, 1350s are in here quite a bit as it looks like as some strangle spreads. No, that's actually 1350s and 1080s are in here as it's the 1080, 1210, 1350. It looks like it's the iron fly. There's some strange ones in here. 1260. Yeah. I don't know. That one doesn't even have a name for me because of the way that the legs are flipped on that. It doesn't look like a tree. It's the same legs as a tree, but it's not the same it's not the same structure, in terms of plus minus minus. But the gold, I want to do something here real quick while we're on, just to sort of go about the same things that we always talk about. I'm gonna, we talk about bottom parts of a range and volatility not being low. As much as vol's up this week, it's still, if you look at the 30-day constant maturity over the last however many months, we're still really low in terms of the volatility. So if we start to look at some stuff here and talk about the same old things that we, let's see if we can do. I want to look at the delta here, 1100. What do we got? 1150. So 1150 put is the 25 delta. So we're $30 away from there. So if we buy that put at 25 delta and then we hedge that thing at, we're hedging it at 1180, and we'll pay, let's say we're going to pay 6.75 for it. And we got our break even on that whole thing.
Would you happen to be using that CME trade calculator you built for them?
I'm using the Quick Strike. I'm using the bigger version of the trade builder. So we got a break even of like 1207. So, you can get a 40-day option, pay, $670, and you come back up to 1207, which basically I like to look at it in terms of where we've been. So, if you look at where we've been, we're off 35 handles this week, and we go to which one are we on? 1178. So, yeah, I mean, you have the chance to get your money back pretty quickly on a move back into the range where we started the week. So we started the week last week on Thursday, we were at 1220. Today we're at 1178. So if we trade back up to where we were at the beginning of the week, more or less, you get your money back and then some. So you're a winner on the put. So I like these bottom parts of a range. Again, same thing. You're at the bottom part of a range. You're kind of in a precarious spot here at 1180. If it goes down to 1150, vol's going to get bid. So your long puts, you're hedged because it's a low volatility. You go down, you got a good vol play because you bought cheap vol hedged. If you rally, odds are vol might come in a little bit, but you're gonna work. You're gonna be long those deltas. So you're gonna move back up into a territory where you're able to get out of those deltas, and now you've got some puts on for nothing. So if you get a move right back up to where we were, you can have puts that you bought hedged, get out of the futures, and be long them for zero with still like 30 days to go. So again, I like talking about that because I think that, to me, if I was actively trading the commodities, that's the kind of trades I'd be doing all the time. If you're looking for these rangy trades, basically trading futures with options is what it comes down to. I get to have a lower, again, there's the word margin. You get to have a lower margin with a hedged, low volatility purchase where I'm going to get my premium back right away and then move back up. And if it continues to go down, I'm in at a cheap vol, and I'm going to get bid if I'm 30 points lower in the future. So
I like it. And tell people where they can find that sweet trade builder if they want to do that kind of analysis themselves, sir.
Well, you go to cmegroup.com/quick-strike, and you can look for the strategy builder. It's a lighter version of the full version that's within Quick Strike is there, but all the things I just talked about you can see in that tool. So you're limited to single month spreads there, but you can do comparisons there as well. Meaning you could build the put and then build the put hedged, and you can do simulations to say if the futures move up or down, what happens, and you can play around with volatility and see what happens if it goes down. So there's some really good flexible tools out there where you can do the same. And Mark, I'm gonna, and even more so, I saw the poll that you did. I don't know if you're going to talk about the poll today but the majority of the people were retail options oriented traders you had, right? Like 50% of the poll, people were retail dabblers.
Yeah, the dabblers, they call themselves. Yes.
Right. So this is sort of a dabbler. It's a good dabbler one because you're in a low volatility environment. You're hedged. You're at a good spot in the future. So if you continue to break, you can make some money on the vol, and if you rally, you can make some money on the low vol gamma where you're getting in your long futures against that position as well. So that might be a dabbler, and then a dabbler trade, and it's 670.
The dabblers. We love the dabblers. We love them all. We love pros. We love dabblers. We love basic folks. We love all of the above. But this is a crazy week here for gold. I need to dive into this report a little more. A lot of stuff lighting it up kind of across the board here, more than we typically see. And we've seen some funky weird upside. This would definitely go in the funky weird upside category, as Nick was just breaking down. Some of these spreads the ratios are funky, the strikes are funky. They don't fall under any established parameters you would think of for these kind of verticals, which kind of makes it fun. 10.5 puts also lighting it up this week. So paper across the board. I guess we needed a nice breakthrough the 1200 level, Mr. Nick, and then everyone came out to play this week in gold across the board. We could spend a lot of time on gold, but we want to make sure we touch on crypto really quick because all the crypto kiddies love it. Looks like things are back above the 6,000 level, 6,400 right about there, 6,395 on the CME futures over there. The AUG contract a little bit north of 4,000 contracts on the tape today, so not bad considering it's a hefty contract out there. We'll miss you on our crypto derivatives panel, Mr. Nick, coming up in a couple of weeks. But I know you're a big Ripple man. You still slinging the crypto out there? Anything catching you out here in crypto land this week?
Well, basically, the stuff is way lower than it's ever been on those secondary cryptos. So people are looking to get in at levels. You're basically in at levels well before the big run up. Like the Bitcoin, I think was still I think this is not as down as the other ones are, right? I'm not sure. I haven't looked at it from a apples to apples standpoint, but the secondary cryptos, and I say that with love in my heart, meaning the ones that aren't Bitcoin, that aren't in the news, that aren't like sort of the brand name they've gotten hammered pretty good. So if you're looking to get in or you want a dollar cost average, feels like there might be some opportunity there. And then I don't know. I just feel like the buzz and the craze is not what it. I know that a lot of the banks are setting up their crypto desks and all that kind of stuff, but to me, it feels like almost lagging in terms of the heat and the hype seems to have. It's easy to get excited when you're always winning, right? It's tough to get excited when you're not winning every day. And I think there are still people trading that are winning, but the novice person who's just buying and holding, they got hammered, and they're going to get hammered, I think, for a little while. So you got to start picking levels if you want to, start to get back in it again, to maybe average your price down a little bit and maybe have to trade a little bit more actively to get some of that money back.
Your favorite Ripple, one of the also ran. I was looking at some numbers actually recently for that panel we're doing, and Ripple or Bitcoin is about $8+ billion. It's all quoted in notional, really, because you can't really compare contracts, obviously. So eight and change billion in terms of notional trading volume out there. Then I think number two, Ripple's number three. And I'll have to pull up the exact numbers. Without Ripple's like $500 million. I mean, like nowhere near. And the second largest next to Bitcoin is like 2 billion and change. So it's about a third of the volume of Bitcoin. So it's all Bitcoin all the time. And you're right. These other ones, XRP, aka Ripple, off 29 cents right now, shy of 30. So yeah, these things have been feeling some heat of late. Maybe some of that probably impacting some of the buzz on crypto. A little bit of a bear market. That'll shake out some of the dilettantes floating around out there. Speaking of people floating around, we got a lot of you guys floating around hitting us up. So let's get to it. Some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the feedback segment, your segment, the portion where you guys hit us up. You guys are all over the place this week, which I kind of love. You kind of hit us from all different directions. I mentioned at the top there, people hitting us up. Was that Mark Brand hit us up with that great chart of just the soybean, the U.S.-China soybean war battlefield, showing just how these things have changed across a bunch of different spectrums, adding in Brazil into the mix, how the Brazilian soybean imports and exports are comparing now versus the year. It's really fascinating kind of one-stop shop infographic for all things soybeans and trade war. So we'll see, maybe we can include that in the show notes. You guys can check it out there as well. A lot of people still on the ag tip. Ned Brown chiming in. A lot of people were responding to this talk of Brazilian farmers have been dumping their sugar crops and switching to soybeans as the trade war is boosting Chinese demand for Brazilian beans. Ned Brown, excuse me, commenting that he says, as I recall from the days when I visited Hawaii, sugarcane takes about 18 months to grow and harvest. Not sure they can easily will go back to that after growing soybeans. So he's saying maybe this could be a long-term problem for U.S. growers, because once they switch to beans, they may not want to go back, or they may not be structurally able to switch back to sugarcane after that. And someone else, you got Keifer here kind of echoing that sentiment, saying, don't expect that business to come back to the U.S. once the tariffs are stopped. So he's saying, a lot of people saying, once that business goes abroad, Mr. Nick, that's it. I'm not an expert on soybean or on sugarcane planting by any means. But does that kind of alarm you, Mr. Nick? Is that maybe something people should be structurally concerned long-term for the beans market? People were saying, the prices are going to rebound at a certain point because it's cheap compared to Brazilian exports. But who knows? Maybe this is the long-term structural challenge for the beans market, sir.
Well, I'm again not being an expert on any of that stuff, but just from a practical standpoint, you give people too much trouble in an attempt to get access to any product and they find an alternate source where the price is similar or close to the same, I think that it's going to be, it will always be a struggle to get a customer back once they leave if they find a fair replacement. So, so I wouldn't disagree with that at all. And but again, I think I'm going to go with what Blue said. If he thinks that the tariff crisis is out of the market, then we've probably seen a little bit of a stabilized price for the time being. And now, who knows what happens, right? China and Turkey both said they'd come and talk to the U.S. about the tariffs to see where that goes, or if that's just, again, a whole lot of nothing. But I would expect that if they lose the business, that it would be difficult to get it back. It depends. It's all price related at some point, right? If it gets cheaper to come back here and get it, then people will come back, right? It's either going to be they get it if everything's the same, it's going to be, and they switch and it's not a problem, then it's going to be difficult. But if they if things go back to the way they were and it's cheaper to get them here, then they'll go back where it's cheaper, right? Isn't it all about the money, right?
It's all about the money, sir. All about the dollars at the end of the day. Yeah. Speaking of your favorite economist, everyone's favorite economist here, Mr. Blue Putnam. We got a question here from Liz. Liz O. She wants to know where she can find all of Blue's research. First off, Liz, it's Blue. It's no E. Just for your own. It's BLU. Short for Bluford. Bluford Putnam. Is that the best name for an economist ever there, Mr. Nick?
It is. He was also credited with some creative help on the Dukes of Hazzard, from what I understand, back in the 70s. So
what?
He has.
Really?
He has.
You tell me this now? He's been on the show.
Joking.
Oh, I was going to say, wow. I was very impressed because I fell for that hook, line, and sinker.
Wasn't Bluford wasn't it?
Oh, wasn't that? Well, there was Roscoe P. Coltrane. Is that? I know there's that guy.
So
and then Boss Hogg. Was there a Bluford? I don't remember that. Maybe there was. It's been a while since I've enjoyed the Dukes of Hazzard oeuvre, but a fine program it was back in the day. I was very excited for a second there. I thought I had an unchapped nugget of blues history that I was going to bring up next time he was on. I'm going to bring that up anyway now, just for the heck of it, because it's fun. But easy, Liz. Go to easy place to go, cmegroup.com. Kind of hard to miss. Actually, you could see how excited they are about his stuff because it's front and center on the homepage. I'm looking at it right now. You'll see on the homepage it says economic research, top of the fold there, and it has all right now. It's all Eric Norland's, another buddy of ours who's also on Blue's team. A lot of his stuff up there about the trade war, quantitative easing, and the more trade war stuff. But if you click that tab right next to it, it says view all economic research. You'll see all of it. You'll see Blue's stuff. You'll see Eric's stuff. You'll see all of the above, and you'll also learn about Blue's history on. Dukes of Hazzard. He also has his own little show there, The Economist Perspective he does over there. So if you want to check out more Blue, there you go. You can get it. Not that I'm going to plug any other shows, but it's kind of in the family here with Blue there, so I don't mind.
It's Buford. It was Buford, and it wasn't Buford. It was in Smokey and the Bandit. It was Jackie Gleason. Was Buford T. Justice, I believe.
So you're mixing all awesome things: Smokey and the Bandit and Dukes of Hazzard.
Well, I'll say I'll get something yelled at. Isn't everything in the South the same? Buford, Bluford doesn't really right. So not true. Not true.
Now people are going to be angry. See, we were going good. People are happy. Now they're all going to get all hate. Instead of getting hate, let's keep on. Let's go with some more. Let's stay with the love theme, Nick. We got love here coming in from Wild Tiger 99 says. Great, interesting. Thanks for talking about and posting about this. This was we talked about last week and posted a link to it. Just the CME July. They do an options review every month. We talked about it and posted it up there for you. He apparently liked it, or she. So there you go. That might even be some of your data there, Mr. Nick. So getting some love.
Wait, say it one more time.
It was the July options review. Does that come from you guys?
Well, some of the data in there will be referenced if we're in there. So
I'm sure, yeah. I'm sure it's got your stuff in there because all the data coming out of CME these days has the quick strike hooks into it. Speaking of data and just the love, keeping the love going here, Mr. Nick. This comes from XRP Please. I like the handle, saying thank you for all the hard work you guys are putting in to build XRP liquidity. Well, that's all you, Nick. You've been the XRP, aka Ripple champion on this show for quite a while. I've been a little bit of a dabbler. I haven't dabbled much. I'm thanking that because it's kind of taken a bit of a hit now. But I'm looking at maybe dabbling some more. What do you think, Mr. Nick? Should I continue my dabbles in XRP?
I think you should. This is a good dabble level. This is a good dabble level.
For all of our retail dabblers?
Yeah, well, I responded to XRP Please because I also took that as I had mentioned, and we're working on it, is being able to take Ripple as a micropayment to use QuickStrike on a daily basis. So instead of paying for monthly, you'd be able to pay as you go. So you go, I'm going to buy the day's worth of access. So we're working on doing that. We're doing that for a lot of the foreign users, outside of North America and Europe, sort of in other areas of the world that don't necessarily have access to credit cards that work here, or they don't want to do full monthlies, or the per capita, salaries per year are a lot lower. So we're going to try to make that happen sometime this year.
Look at you being on the crypto cutting edge, sir. If only I had a session where I was discussing all this in like a week and a half. That would be. You can at least come and heckle me. That'd be kind of fun.
Honestly, it's just like it's a Saturday, and then
you can't handle
to put the word expert next to anything that I'm related to. It's always a reach for me. So, there you go.
You do yourself a disservice, sir. But that music means I can't believe we did an hour again. We'd probably do 3 hours standing on our heads here, Mr. Nick. But we gotta wrap it up here. Thanks for your questions, all the love, you guys. You guys are overwhelming us with love. I feel the warm fuzzies in the cockles over here of the heart. So keep the love coming. Mr. Nick loves the love. Give him some love. And of course, you got questions. Keep all those coming too. Maybe we'll do an all question episode. You guys are just hitting us up on all soybeans, on Ripple, on you name it. That's why I love this show, because it's kind of all comers. If you have a product you want us to hit on, hit us up, because chances are we will. So do so. You know how to hit us up. You know how to do all that fun stuff. Keep the love coming. Our friends over there at CME Group, if you want to see more like, what was it, Liz O. If you like Liz or the rest, you want to read more of Blue and Eric's research, they got great stuff. Guess what? It's free. CMEgroup.com is the place for that. Also hit /TWIFO if you want to check out the reports. Also, while you're out there checking things out, go to FTSE Russell, FTSE Russell.com to learn more about all the data they got going on about the indices and volatility and benchmarking and, smart beta factors, all that crazy stuff. If you want to hit that up, FTSE Russell is the place to go for that. Also, give them a follow over there on the old Twitters, ftserussell.com. Get all that data throughout the week, in between episodes, and we'll get Sean back on to talk more about that fun stuff. And last but certainly not least, he talked about all the kind of good stuff he has. He's even taken Ripple for micropayments. You guys are cutting edge over there, Mr. Nick. What else is cooking in the land of QuickStrike, sir?
Well, we're not there yet, but we're going to try to get there as soon as we can. What else is going on? I mean, like I mentioned before, got some new tools coming out this quarter, so stay tuned for that. Some event volatility and some expiration calendar stuff. I think it's going to be pretty good. Also, you want to keep an eye on what we just did. We just released. It's out there. You can get, if you're a block trade watcher, you can register for some block trade alerts. So that's out there as well. And then, as always, and most importantly for this last quarter too, we've worked very hard to get the quick vol tools out there. Our data now is available in Datamine, so we got data back to 2007, historical at-the-money volatility, skews, delta, curves, realized futures volatility for 40-plus products in the CME Group. So you can get that through Datamine or through QuickStrike's Quick Vol tool, and you can learn more about QuickStrike at Bantix, BANTIX.com. So give us a look.
Bantix.com. If you like all the stuff we're talking about, maybe you want to dabble in some micropayments with crypto, they're getting there. If you want to just check out the reports we're talking about all the time, literally, if you're trading these products, if you're interested in these products and you're not going to Bantix.com and you're clicking on that sign up for QuickStrike, but I don't know how you're doing it, because this is kind of the only game in town when it comes to analytics for this kind of stuff. So Bantix.com, BANTIX.com, click on that blue sign up for QuickStrike button. You get a free trial first, kick the tires, light the fires. If you like it, I think you're going to like it. You could sign up for the full kit and caboodle, and you could use this stuff all the time. You can send us your ideas. Here's a screenshot. I saw this in QuickStrike. You guys will talk about this on the show. We'd love it. It'd be great. So check it out, Bantix.com, to learn more. And on behalf of Mr. Nick, everybody over there at QuickStrike, and the folks at CME, and the folks at FTSE Russell, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, listening to us at our new time. We love you guys. And we'll see you back here tomorrow for Volatility Views. Same bat time, same bat channel for that one, noon central. That hasn't changed. Then we'll see you back here next week for more of This Week in Futures Options.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.